Another all-time high for the public count, 3.7 plus here today. Absolutely phenomenal. It's on its way to 4. Congratulations to everybody out there hitting new all-time highs in your portfolio. Absolutely unbelievable to see. And I mean, what a change. What a change versus 3 years ago, 1.1 to 3.7. Like, oh my gosh. Okay. At the beginning of this video, I want to do a little stock talk. We got some stocks moving huge here that I want to speak about. Cake, Palantir, Fubo, SoFi. I just want to talk about a bunch of stocks at the beginning of this video, okay, and kind of my thoughts on the moves, where they're headed from, and things like that, okay. From there, we're going to react to Tom Lee. Tom Lee spoke about his thoughts on where the market's headed, Bitcoin as well. That was kind of the title of the video, but he spoke a lot about where he sees this market headed from here, stocks in general, where he sees opportunities, things like that. So looking forward to reacting to that one. Then we're going to react to Josh Brown, best stocks in the market strategy. Looking forward to reacting to that one. And then we're going to listen to this one from just an hour ago, the Halftime Investment Committee debating big tech strategy. So I'm looking forward to reacting to that one, sharing my opinions and perspectives. And it looks like they got Joe Terranova, they got Scott on there, and they got Mr. Short Hills Capital. So that should be an interesting one. So busy action-packed video. I'm in Georgia right now. Georgia. It is very humid, very warm, and also raining all at the same time. So if that sounds like Georgia, that's where I'm at, baby. Okay, so yeah, I'm in a hotel room in Georgia right now. Hey, pin comment down there today. What I'm going to put for you guys is a free checklist, okay? You might want to definitely take advantage of this. It's a free checklist I have. I can email it over or text it over, either one. But basically, it's a good checklist for before you ever buy a stock. Run through this checklist. This is how I view a stock in terms of kind of my checklist on what I need to do before I could ever buy a stock. So yeah, I think a lot of you guys will get a lot of value out of that. So I'll put that as the pinned comment today so you guys can get access to my stock picking checklist there. And then other than that, the only thing I need from you guys is to smash the thumbs up button. That's all I need from you. I hope you can do that for me. That's it, man. I get you a free checklist. I do these reactions. I talk about a bunch of stocks. All I need from you, I'm in a hotel room in Georgia. All I need from you is a smash the thumbs up button. I hope you can do that for me at least, man. That's all I need. That's all I need. And additionally, if you want to be subscribed to the channel, you can certainly subscribe. We're 102,000 subscribers deep now at this point in time. Okay, listen. We've got to talk about Cake. Cake is now up 98% from where it was back in August. I mean, what an unbelievable move for this stock. And this doesn't even include all the dividends received over this past year, right? Because Cake pays dividends every 3 months. So you receive all the dividend money. So if you factor in the dividends, you've, just since last August, you've received well over 100% return, right? Unbelievable. And, my thoughts on Cake is, I don't even think we've gotten to the best part of Cake yet. Like, the best part of Cake really comes over this next few years as they really understand Flower Child, North Italia concepts and how much expansion those businesses have over the next decade. Once we get to that phase, Cake's going to be a lot of fun. We haven't even gotten to that phase. I mean, I reacted to a Wall Streeter, I think it was here on the Reaction channel last week. He actually brought up Cake, which Cake is not a stock that's ever talked about on Wall Street. That's not a stock that's ever talked about on CNBC, but it's doing so well that people are starting to actually talk about Cake on CNBC. Like the Wall Streeters going on there starting to talk about it, right? Which is shocking. This man didn't even bring up Flower Child. He didn't even bring up North Italia. He didn't even bring up the bullpen of stocks, of restaurant concepts this company has coming over the coming years. He was only talking about the Cake brand. And so I'm just like, dude, we'll just wait. It hasn't even started in regards to a really fun cycle in regards to Cake. That's coming. As far as expansion opportunities, Palantir continues to show unbelievable strength. Look at this stock since last August, 477% gain. I mean, this is why we do it, folks. This is why we do individual stock picking. I mean, you invest in the right stocks, they change your life. There's no other way of putting it. They change your financial life forever. You get in the right stocks. I mean, what else has given you that sort of return since last August? You know what I mean? Like, where else are you making 477%? I mean, 477%, you got to understand, people usually invest in index fund and hope to make 477% over like a 20 or 30 year span. Literally, if you invest in an S&P 500 index fund, you would hope to get 477% return over like literally a 20 to 30 year span. And Palantir is giving you that just since last August. When you get it right, it's game-changing, it's life-changing money, right? Fubo is doing decent. This stock is up 165% since last August. Fubo, we're still all waiting for the big day. You all know what the big day is, okay? SoFi's flirting with going do-si-do. Do 22 is flirting with it. We'll see what happens with SoFi's earnings. If those earnings are really good, guides good, and conference call sounds good, I mean, we could be off to the races to 25. But we'll see. We'll see. The thing is, Anthony Noto, here's the thing, okay? In regards to the holdback of SoFi going 25 plus, okay? Listen, here's a deal with what could potentially happen on the conference call for SoFi. What could happen is, let's say the numbers are good, the guidance is good. Anthony Noto he can be very conservative. So he can come out and he could talk down the business. He could talk about all the risk factors and those sorts of things, right? And that could potentially hurt the stock after earnings because people are like, oh, Anthony Noto, he's worried about this, worried about that. He's concerned with this, he's concerned with that. So he could almost like talk down the stock. He's definitely no stock pumper. He's not going to go out there and tell you everything's the best it's ever been and it's only good things. He's going to be very realistic and pragmatic about where the business is at. And sometimes people get down about that. And so the numbers could be good, but if he talks, about all the scary stuff out there, maybe the stock moves down, right? But we'll see. If the numbers were so strong and the conference call was so strong, like we're seeing 25 after earnings, but we'll see what happens with that. AMD continues to move. That one's on its way to 175. These stocks never move up in a straight line, right? They never move up in a straight line. But the moral of the story is it's very clear what's going on with AMD now at this point in time. Very, very clear. Nike continues to move up. That stock up another 1.7% here. Celsius moving, ELF moving. Good to see all that, right? And, so just a lot of momentum. I would say that. Momentum in, especially a lot of the good quality stocks, because you're not seeing the momentum everywhere in this market. But you're seeing it in the, good quality, the exciting stocks. That's where you're really seeing it, right? All right, let's get into Tom Lee.
Head of research, probably not coming as a big surprise to you, Tom. You've been saying similar things, but one of the things you're emphasizing today, the most hated V-shape bounce in history, or at least in your young, but getting older life.
Yes, that's right. I think many people, when April happened and we had Tariff Armageddon and the market went into a free fall, investors liquidated because they thought we were entering a recession. But, and as you guys had covered, like the market then staged a V-shaped recovery, which caught many people off guard because they wanted to have a chance to get in. They wanted the stock market to be like a K-shaped or flat line. Instead, it was a V-shaped bounce. And so most investors are underexposed at the moment, and they're trying to look at headlines with a half-empty view. But as you...
Let me let him finish, and then I got to get into a big point if you want to make a lot of money in the stock market.
You guys know earnings have actually been really resilient, and I think it tells a very good story.
Yeah, Dow's hasn't been.
Okay, so there's a huge mistake investors make. When something happens like what happened in April, right? A lot of investors think they know how the stock market's going to react after that. So they think it's going to be a slow recovery, or it's going to be this type of recovery or that recovery. You have no clue what type of recovery it's going to be from the stock market from there. If you're hoping it's going to be some slow recovery, it might be. And then, it might slowly go up over the next 6-12 months and come back. It might also be back in a month or two. And we've watched a lot of these V-shaped recoveries in the market. So how do you make the most money when you're in one of those markets? When you see the VIX go 30 plus, then push 40 plus into the 50 range, you buy hand over fist. When you see the NASDAQ go down well over 20% from recent highs, you buy hand over fist. You buy, and you buy, and you know what you do after that? You buy. And, if the market slowly recovers and it takes, 12 months, 2 years for it to get back to the previous highs, that's fine. That's fine. You're already buying the market in stocks if the NASDAQ's down 25%, you're getting likely 40 and 50% discounts on a lot of individual stocks, right? Sweet. That's fine. Take a year, take 2 years to come back to the previous price. That's fine. It's still going to be a great return in the end. But you know what happens a lot of times? It comes back way faster than that. You'll see stocks bounce back in a matter of 1 to 2 months. 1 to 2 months. And so if a stock goes down 50%, what does it have to? How much does it have to go back to get back to that previous price? 100%. So a lot of these stocks go back right back to their previous price in a matter of a month or two, which means you make 100% appreciation. And that's what we've seen from countless stocks. I could show you stocks I own personally that have climbed between 50% and 150% since April bottom. 50% to 150% in a few months. It happens quick, really, really quick. And so that's how you maximize your amount of gains when you're in a market like that.
It has hit a new high, but it hasn't in the recent session. But S&P and NASDAQ continue to do pretty well. So there is also a perception, Tom, that valuations have returned to levels that have people worried. And you are citing an equity-weighted S&P multiple. Explain that.
Yes.
Of what? What's the equity-weighted multiple right now?
Yeah, what we're saying is instead of someone saying, oh, the MAG is making the market expensive, let's just take the average PE of the S&P of every stock. And it was around 17.6 times in 2019. Now we've had 6 what I call extinction-like events, COVID, the bullwhip supply chain effect, inflation surge, Fed fastest hikes, Trump tariffs, and then, of course, U.S. bombing Iran.
6 of them, yeah, okay.
Yeah, all of them should have wiped out earnings, but the S&P earnings have grown, and yet the equal weight PE is now 16 times. So the market's gotten cheaper in the last 6 years, despite proving they can grow earnings through 6 extinction-level events.
The Mag 7, though, there was a journal article that says there's a real split between the Mag 7, those that are really doing well from AI and those that aren't. And if you look at the stock performances, I think Apple's down something like 16 or 18% over the last year, while you have Microsoft and others that have really taken off. Do you think the Mag 7 stays together, or do we need a new terminology, a new grouping for leadership in the market?
Yeah, but whoa, hold your horses for one flip and flapjack moment here, okay? In regards to Apple, listen. Apple's underperformance is not just because they don't seem to have a good AI strategy and because they're not spending money on AI. That could be part of it, but let's not kid ourselves. Apple's business has not been very exciting the past few years. Like, look at Apple's numbers, look at their products. It doesn't really have anybody saying, oh, Apple's so exciting stock, such a exciting investment opportunity. It doesn't, and it trades rich. So that's why Apple's underperforming. Like, the AI component, that's a small part. Most of it just has to do with, like, people are not excited to go out there and upgrade their iPhones and iPads and Macs and all that sort of stuff right now. And so that's definitely holding Apple back. And when you got a higher valuation, it holds you back even more. So if you look, like, over the past 2 or 3 years, that's why Apple is so significantly underperforming stocks like Meta, or even stocks like Microsoft, stocks like nvidia. That's a huge component of it.
To me, the Mag 7 have become household names. Apple is Apple, and Google is Google, and we know the product and we know the stock. And I think they have really established themselves as consumer and business companies. And for me, Apple has been sort of quietly ready to pounce on AI, but I don't think they need to pay up for any of these models. So I think Apple is going to surprise people.
That's interesting. That's a contrarian viewpoint. People think Apple either is too far behind or just isn't going to be able to get the talent that it was. It's losing talent, not getting it.
Yeah. They didn't launch an iPhone until 2007, and mobile phones had been around for 15 years. But when they did enter that market, they completely transformed the marketplace. So to me, I think when they want to play big in AI...
That's just such a bad... it's just such a bad take from a very intelligent gentleman like Tom Lee, but I'm seeing just so many people get wrapped into this bad thought process around Apple. Oh, mobile phones were and then they came out with the iPhone. Look at how successful they were, right? Listen, man, where's Steve Jobs? Where's Johnny Ive? Steve Jobs and Johnny Ive are the reason the iPhone was a big thing. Steve Jobs and Johnny Ive were the reason the iPad was a big thing. Steve Jobs and Johnny Ive are the reason the MacBook was a big thing. Steve Jobs and Johnny Ive, those two gentlemen, the whole product suite that Apple has that's been their big money makers, all Steve Jobs and Johnny Ive. They're not around to pull the next rabbit out of the hat. to make the next huge successful thing. So to act like oh, Apple's just going to come out with the next massive $1 trillion business without Steve Jobs and Johnny Ive, it's just not. Those are the two guys. If you really understand Apple deeply, you understand everything came from those two gentlemen, and neither one has anything. One's passed on, obviously, and the other one has nothing to do with Apple anymore. So you're screwed. Like they got their cash cow businesses, and they're just going to keep throwing off money, and they're going to ride those businesses as long as they can. And until the smartphone market's really disrupted, and tablets are really disrupted, and app stores are really disrupted, until that happens, Apple's going to make bank. And so someday that's going to happen, right? Someday we won't need smartphones anymore. Someday we won't need, MacBooks or iPads anymore. But when is that? I don't know. Maybe it's 5, 10, 15, 20, 30 years from now. Someday it will happen. And that's when Apple will actually face a crisis in their business, right? But that's a long time from now. And so, but to assume because Apple did successful stuff in the past, the two gentlemen have nothing to do with the company anymore. That made the whole business.
And when they do in that moment, I think they will change the game.
Well, so the question though is, do you think that historically they've been able to do that because it's been a hardware game largely and a bit of software? I don't want to say.
Oh, this disgusts me. It's so disrespectful. It's so disrespectful. Steve Jobs and Johnny Ive. It's so disrespectful. This is unbelievable disrespect. Unbelievable levels of disrespect to Steve Jobs and Johnny Ive, what they're talking about right now. And assuming Apple can do all these big things, because it's Apple. Dude, no. It's Steve Jobs and Johnny Ive. Freaking, it's unbelievable.
Software's not a huge part of it. But the question is whether you think the LLMs have become so advanced that to get there, you actually have to buy somebody else to do it, or you can actually catch up. I mean, that's the fundamental question underneath all this.
Yeah, and it's also possible that LLMs all get so good that they are about the same.
Right.
And then Apple
gets commoditized.
Correct. And so then Apple comes in and says, look, we have our safety. Look, we're known for our safety rails, protecting your privacy, optimizing what you want to do, make your life better. And they might come out with a version that really, makes heads spin. So I think that I'm not ruling out Apple just because they're a little late.
What do you make, by the way, there's some speculation over the weekend, some reports about the first real Apple foldable phone this fall. Would you buy a foldable phone?
Yeah, I mean, I'm...
Big market in China, by the way. People in China seem to love foldable phones.
I think what I found is when you offer someone a bigger screen size, you're pushing them more towards computing and something much higher capability. And with AI, we might want some of that augmented kind of reality. So maybe the time is right for, a foldable phone. And again...
I'm sorry, we got a minute left after last week in the Genius Act. And you suddenly are, I don't know what...
Yeah, I mean, the name of the game for Apple is just keep, coming out with bigger phones, foldable phones. Do whatever you got to do. As long as the phone cycle's still here, Apple's good. Until the phone cycle breaks and we actually break away from smartphones, that's when Apple's going to have problems. But for now, change the form factor over time, make it a bigger screen, make it thinner, put 5 more cameras on it. Do whatever you can to just, keep trying to get some level of excitement around the phone. All right, Josh Brown's best stocks in the market strategy.
I'm going to focus on 2 names that are actually in danger of falling off your list.
Yeah, as Joe Terranova would tell you, the number one factor performance this year is momentum. Better than value, better than dividend, better than growth at a reasonable price. Just far and away, this has been a momentum market really since the jump. And as a result, a lot of the names on my best stocks list have been huge winners, but not all of them. And not all of them. And not every trade goes right. And I wanted to use this as a teachable moment because I have a couple of names that are in danger right now. One is called Expand Energy, and the other one is called Deere. And the important thing here is one of the number one mistakes I see investors or traders make, and this is throughout my whole career, buying a stock for one reason, it goes against you, and then coming up with new reasons to not take the loss. It's just like the absolute kiss of death. So you'll see people say, I bought it on the technicals break down, and then they're like reading through an 8K. And it's like, what are you doing? So here's what's going on here. Expand energy.
So I gotta pause it right there. That's huge for a lot of folks watching this video right now. what he's explaining there. You know, you don't want to, and what happens with a lot of investors is they'll get into a situation where they buy stock for XYZ reason, right? And you know, that reason won't come to fruition, but then they'll stay in it because there's hope of something else and whatnot, right? You know, you got to just identify that and be able to say, hey, you know what? Wash my hands, I'm moving on from this situation, right? Rather than just trying to stay in it. And it happens all the time. It happens to fundamental investors. It also happens from folks that maybe just get in the market, they start buying some random stocks, they don't know what they're doing, right? And then, you know, maybe they start learning the game a little bit, right? And then they still want to hold on to something because they lost money on it, you know, that they didn't really know what it was when they didn't really know about the market, right? And so, yeah, that's a mistake that can definitely happen.
Energy is a U.S. energy producer. It's not been a good sector, but this was one of the better names. It may be stabilizing here, but the stock is now below its 200-day moving average. Natural gas prices are negative 15% over the last month. Crude is negative 5%. These stocks just can't hold up in that kind of an environment. And so you see that across the sector. For investors, I might be tempted to leave it on the leash because it looks like it's finding support here around this $100 level, and it's found support here twice earlier in the year. For traders, when we put up these columns at CNBC Pro, we're already telling you, here's where you're wrong. Here's where you might want to exit if you're a shorter term trader. And those people should already not be in the name. So I'm just highlighting this as an example of when a best stock becomes just a mediocre stock. And it happens all the time. We never assume they're all going to work. I'll do Deere quicker. Sorry.
So his thought process, let me cover Deere, and then I'll tell you why I don't like his thought process in regards to his energy drink company. I only invest in energy drink companies. I don't invest in energy companies, but I'll explain why his thought process, in my opinion, is flawed here in just a moment.
Deere still deserves the benefit of the doubt. It hasn't gotten anywhere near its rising 200-day moving average. And this is a really big stock, and it tends to move a little bit on the slower side. So I would take this pullback with a grain of salt. I would not overreact to it. The company will report on August 13th before the market opens, and I would stick around for that report. The last time they reported earnings, Frank, the name hit $528 a share. Huge day. And I know tariffs are a concern here, and that's probably explains the short-term weakness. Deere is very good at managing supply chains, and I do not think that's going to take this thing down when they report. So that one, it's in danger, but I would still stick with it as an investor.
Yeah, so his thought process there, you know, at the beginning was very good, but I didn't like his thought process at all in regards to the energy company there. And here's why. One, he's bringing up technicals, and then he brings up fundamentals. So he's trying to tie in 200-day moving average with, you know, what's going on with natural gas prices and oil prices and things like that, right? But that's not even the bigger problem. The bigger problem is he's talking about getting rid of it because these stocks don't hold up when, you know, natural gas prices are weak and oil prices are weak and those sorts of things, which is true. But you buy into an energy company, you've got to plan on that. That's like gas prices going up and down, like that's part of what the game's going to be when you're in an energy company. Oil prices going up and down, like, you know, over a 6-month span, oil could be red hot and oil price could be, you know, going up and up and up. Over a 6-month span, natural gas could be doing horrible and going down. You just got to factor that in if you're ever going to be an investor into an energy related company. So that's just like, you know, to make a move off of that, in my opinion, is just not the right thing to do.
Said kick off in a couple hours. We can show you the calendar, which really lays it out. Mostly next week, but some important ones are this week too. What's at stake?
Well, first of all, that stretch begins with you coming back. Great to see you.
Did he behave himself while I was gone, and he being Weiss?
Modestly, but I know now that you will rein him in and keep him under control.
Okay.
I've been unleashed.
I'm well rested.
You are well rested.
He was unleashed when I was gone.
But look, Scott, I mean, while you were away, and even today, it's just a
Weiss was having the time of his life when he was gone. Remember, he was laughing, he was joking with the woman there. Oh, man. Now Scott's back. It could be tense again.
Continuation of really, really good news for the market to cheer and applaud. And several weeks ago, I told you I expected that the third quarter, this was the potential quarter where you get a little sideways to lower action. I still think the leading indicator for that is going to be the semiconductors and going to be the technology names. So here we are. We're stepping into earnings. Alphabet, Tesla, IBM. Next week, obviously, we know the rest of the Mag 7, and they're going to be critically important. They're going to be critically important because what you want to pay attention to is the reaction. What is the reaction? Do we get a continuation of a lot of good news and good price action, or do we finally signal that there's exhaustion in the market, the need to pull back, good performance, you get the good earnings, but you don't get the performance?
There's not a lot of exhaustion, it doesn't look like.
Not anywhere. Not anywhere.
Joe T's at a record high. It gives you an idea of the momentum that remains behind this record-setting rally, Jenny. So you have a lot on the line for a lot of stocks that have done unbelievably well over the last 3 months. From the mega cap space, that is where the epicenter of this whole thing is. Nvidia's up 65% in 3 months, Meta 36, Microsoft 34, Tesla 33, Amazon 26. Alphabet's up only 22%. Only 22%, and no one owns it today. Why? Why? Did people write this company off and their position within AI too much too soon? What do you think?
I think this is a welcome back to you, which is that I own such a small piece of Google, Alphabet, that I sold 95% of the position, but said, you know what, it's pretty cheap. I do have my concerns. So I am participating, not in any meaningful way. If the stock doubled from here, it really wouldn't matter. I think the issue is still there, and I think why people bought it is that Waymo is number one. And if you take a look at what happened after we had Tesla have their robo-taxi announcement, it started moving up when people focused on that. And I also think that they're looking for companies that are cheaper, that are left behind. So they may have enough Meta, they may have enough Microsoft, they may have enough of the other Mag 7s to say, look, they stand a really good chance of definitely being in the conversation with AI, and right now that's more important to me, as is Waymo, than perhaps losing share in search.
So Mr. Shorthill's Capital here brings up a phenomenal point. Listen, I could even look at myself. Why did I go buy Google stock, April 23rd or whatever, right? And I'm doing phenomenal in that position. But why did I do it over Meta? Well, because I have enough Meta. I have so much Meta, it's coming out of my ears. There's too much Meta, okay? And so even if I like Meta as a better investment opportunity, just from a risk standpoint, I can't really buy more Meta because I have so much invested in Meta already, right? Between my different portfolios. Google, on the other hand, I don't. And Google I like for the next many years. And Google trades cheap. So what happens? I buy Google, right? And so the point he brings up there actually is a very good point, and I'm sure I'm not the only person in the market who's thinking that
Your
way.
pal Farmer Jim made a good call on this name.
Sure did.
Yep.
On the day of the Eddie Q sell-off.
Yeah.
Right? He's in a courtroom. He's talking about, first time ever, we see a drop-off in search. And the stock's like, stock goes down, everybody, including many on this desk.
Josh and I pushed back on him at the time. Sorry, Jenny. We pushed back.
Maybe this is existential now because this is what they are. This is at their core. And the stock's up 25% since that day. 25% since the quote-unquote Eddie Q sell-off.
Yeah, but that's a small time period. So maybe if you're a trader and you nailed it on that.
The stock's up 25% since like a tremor.
Okay, and it's up 1% year to date, and it's up 5% over the last 52 weeks. But I'll tell you why we don't own it. Because this is one that I've been telling you, Amazon and Alphabet have been kind of pecking at the edges of our screen every week for our disciplined growth strategy, where we're looking for a high free cash flow yield. And the free cash flow yield is getting there. But here's why we haven't bought it. And it really boils down to just this. Gartner's forecasting a 25% drop in 2026 in single search engine queries. At the same time, you look at Meta, and they've got 90% margins in their single search engine queries, right? So however you look at it, even if they do great in AI, even if they do great with Gemini, it is not as profitable as the main business, and that keeps us at bay. So you look at it and you're like, okay, 19 times, decent earnings growth ahead, but compared to all the other Mag 7s, I think that their earnings are more at risk. I know me personally. I am borderline not using Google to search anymore. I'm using ChatGPT, I'm using Claude, I'm using Grok, I look at Gemini a lot.
Perplexity,
It's just
and on and on and on and on. But
you can, okay.
Maybe that's why the mobile's had a 40% discount.
Yeah, that's why it's the
also.
cheapest
Okay,
Mag 7.
okay,
right.
define discount.
Now,
Discount to what?
let me
Discount to
tell you
what?
something. It's always been
No, it's
among
always
the
been, yeah.
cheapest of the Mag 7s.
But because you're buying an ad company, right? I mean, that's basically what it is. That's where they made their money. But this may all turn around. It may be down 15% tomorrow.
You also have the DOJ ruling that is ultimately we're going to learn in August what the resolution of that's going to be. Do they need to be broken up? That's important as well. But this quarter,
But that's
this
50-50 if the sum of the parts
absolutely.
is worth
But
more
why
than
has it gone up 10 straight days? It's about this quarter. It's about Google Cloud being really strong. It's about digital ad sales coming back very strong in the quarter. And I think tonight they're going to report a really good quarter.
Yeah, Bryn, we almost buried the lead. It's coming off 10 days in a row.
And this is why I say, what does Google need to do to have that stock fly the next 12 months? Here's all Google needs to do to have that stock be a beast the next 12 months. They need to just keep putting up good numbers. They just keep putting up good numbers quarter after quarter after quarter. All this talk, all this debate will start to end. As long as they just keep coming in, hammering good numbers. Good number after good number after good number after good number. Right now, it's like this whole debate about, search might drop, ChatGPT, Perplexity, blah, blah, blah. How much Gemini going to get, right? Copilot, whatever. There's a lot of talk. Put up the numbers quarter after quarter after quarter, and the talk will go down, 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 down. And it'll just keep going down. But they got to keep putting up the good numbers. As long as they do that, Google stock will continue to come back, and people eventually start giving up on the bear case.
It's trying for the longest winning streak ever today. And now it gets added to the top picks list at Oppenheimer. What are your expectations for this evening?
Well, I think that with Google, the expectations are for 11 and 16% revenue and earnings growth. But I think as everyone's talking about, whether it's Claude, Gemini, et cetera, all of these LLMs are going to look more and more the same. And so I think where Google long-term has a challenge, if you look at these companies, Google's actually the most vertically integrated to win. And if you think about Gmail, Google Calendar, Google Search, you have YouTube. Google has all of our data. They could easily flip that on and make a really powerful AI assistant, but I think it would freak everybody out because at the end of the day, guess what? They still sell our data. And so I think that where you have, Mark Zuckerberg is just like full force, poaching talent. They can get their AI in Instagram and Facebook and monetize that. I just still feel that with Google, it will remain a cheaper name, because I don't think their ability to actually monetize their AI has been clear. And I don't think we'll get any clarity of the ability to monetize, which is the key thing, monetize AI. Whereas with Meta, they're going to monetize it via Instagram and Facebook, because we all buy stuff every time we go on there.
That is the key.
We all buy stuff every time we go on there. I don't know about that. I think a far majority of people do not buy anything when they go on to Facebook or Instagram, right? They might see a lot of ads, but I think actually a very small percentage actually end up buying something while they're on there. But, here's the thing, okay? I think she was making a solid point here. And this is the last really overarching point I want to make. That's a great tip for investors to understand, stocks on a higher level of why this stock does really well versus a stock. What she laid out there in Meta versus Google, what does that sound like Meta's doing? What does that sound like Google's doing, right? Investors view Google as being on what? On defense. People view Meta as what? As being on offense. And you're going to pay a very different price for a company that's on offense versus a company that's on defense, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. Thank you for smashing the thumbs up button, all those sorts of things. And once again, make sure you guys grab that checklist on things I look for before I end up picking a stock. I think that's going to help you guys out tremendously. That will be the pinned comment down there. Much love and have a great day.